Drum roll, please. Good morning, everybody. Let's run it and have an absolutely great week. Welcome to the first Premarket Prep, our deluxe edition, because on Monday we go over all the important news, notes, and information, not just for Monday, but for the whole week. We lay the groundwork, we lay those expectations, and this is where, the rubber meets the road. This is where the game plan is devised. And again, money is just a byproduct of the system, right? And execution of that system. So this is where all of that, is I want to say architected, but I know it's not a word, right? This is where all that is like structured. This is where all that starts is right here during this session. So we absolutely banked on Friday. We were able to take advantage of a lot of different opportunities that came about, namely Apple, which was called out here during the pre-market prep session. So that's the beautiful thing, is that you can get a lot of free game just by tuning in here. So make sure that this is where you start your week, because this is the single most important thing in terms of laying the groundwork for what to expect out of the week. And if you have the incorrect expectations, you will most definitely get your butt kicked by these markets, right? So the Monday session is super important. And without further ado, I'm going to go ahead and dive in. But before I do, you guys make sure that you throw your ones in the chat and find your intention to get 1% better by the end of this session. That's what we're trying to do each and every day. You don't have to change the world. You don't have to triple your account, but you getting incrementally better is what allows you to have those, huge breakthroughs and close the gap between where you are and where you want to be. So everybody, great weekend, a safe weekend. I'm excited to get back in another new week full of opportunities and to take advantage. So our top news here in the week ahead, we'll see earnings reports continue to pour in as investors work their way through the bulk of the reporting season. The list of heavyweights due to report includes McDonald's, ticker MCD, Caterpillar, ticker CAT, Alibaba, whose ticker is BABA, Philip Morris, and PepsiCo. Federal Reserve members will also be back out on the speaking circuit following last week's FOMC meeting. So, whenever there is an FOMC meeting, I'll wait for, I guess, this to go by. Whenever there's an FOMC meeting, these, Fed members have like a blackout period where they can't speak. But now they'll be back out on the speaking circuit, which I'm sure everybody was, super anxious to happen. That's me being facetious. I doubt many people care. They really only care about Powell speaking and then the FOMC minutes. Let me see if I can turn that down as well. Meanwhile, some of the key economic events to watch include the release of the Fed's Senior Loan Officer Opinion Survey on bank lending practices and updates on consumer credit, the trade gap, and PMI. I'd say PMI would be the only important one out of those. So we'll see when we get PMI data this week. A bit of an economic wild card will be the release of CPI seasonal factors on February 9th, which could lead to slight revisions to seasonally adjusted inflation data. I feel like just the straight up CPI data is what the market cares about the most. Historically, the month of February has been relatively flat for the S&P 500 and NASDAQ 100 indices, while the Dow Jones Industrial Average has posted negative returns on average in the Russell. Those are smaller companies, and those are the companies that are catching up to all the big techs that. So that's important to recognize too going into February expectations for this month. Typically, it's a flat month. What does that mean? That doesn't mean that we always all month. It means we could go up and then go down, and then by the end of the month end up where we started. So I think it's one of those things where you just pay attention to individual names, find those individual names that are moving, and take advantage of that opportunity. And then, when the indices like QQQ or SPY show a solid look, then you take advantage. But all last week, there was no business pretty much, unless you're scalping, that anyone had trading SPY or QQQ. There was just no business whatsoever because it was a chop fest. There was no price action that led one to believe that we were headed higher or lower from where we were. We did get that toward the end of the week. So today will be very important for QQQ because QQQ can break out to the upside if we get a close slightly higher than what we got last week. I'm opening Thinkorswim now. But I had that exact level posted in the group. So that'll be something where if QQQ can close above that level by the end of day, the market can run, from that nice daily breakout. We had Apple last week. They started to get moving. Apple paid hand over fist on Friday, and Apple can continue to pay here as it already has some alerts going on for me pre-market. So we'll see if we can get that breakout that we were waiting on. But we could see Apple, which is down compared to, the rest of the Magnificent Seven this year. It's like Apple and Tesla are the only ones that are negative. And I'll just say this: I don't think Apple will be negative for much longer. So if we break that hourly downtrend, that shorter term hourly downtrend, Apple can shoot up and rejoin the rest of its Magnificent Seven stock, group members on the moon, and really get things going. Might be today, might be this week, but right now it's looking good. But that hourly downtrend is what we're eyeing a break on Apple to get that continued rocket to the upside. But we caught that initial move on Friday, which was just absolutely spectacular when it came down to zero dates, as well as this week expiration calls. Both of them went for multiple hundreds of percent profit, which was pretty crazy. In terms of earnings here this week, McDonald's is on Monday, Caterpillar Monday, Tyson Foods, ticker TSN, NXP Semiconductors, and then Estee Lauder also on Monday. Tuesday, we get Eli Lilly, right? Something that we've been trading also. Eli Lilly, another one of those profitable trades on Friday. It teased the breakout on Wednesday, got the breakout Thursday, pushed and hit price target number one on Friday, and it looks good to continue pushing heading into earnings. And that's one where I'd be fine with, swinging one of those contracts through earnings, just considering, what earnings was like for Novo Nordisk. And Eli Lilly is probably going to follow in those footsteps as well. So I'd be fine with that. Just also understand that, again, if you wouldn't throw it down the toilet, don't play it on earnings. So don't go take your rent money and throw it on Eli Lilly calls. But if you have been playing that and you've been in from the beginning and you understand the strategy involved and you're already up on some, then by all means, right, you could swing one of those through earnings and see if you can bring home, a nice chunk of change there. But that's a big one, right, on Tuesday that I am definitely keeping my eyes on. We got Ford Motor on Tuesday, BP also on Tuesday, Toyota Motor, and Amgen. Wednesday, we get BABA, CVS Health, Fox Corporation, Disney, right, on Wednesday. That'll be important. Uber and PayPal. So Disney, something that we've been trading often. Disney, reporting this week. So we'll see what we get this week and how that will affect those Disney longs. And hopefully Disney can get a move on before it even has to report. So then that way we can get our money. And if you decide that you're feeling saucy, you can leave a little bit in there and swing it through Disney for earnings. On Thursday, ConocoPhillips, Philip Morris, Duke Energy, Take-Two Interactive, Pins, and Expedia all report. And then Friday, PepsiCo, Newell Brands, and AMC Networks. Let's see what else we got going on this week. Any important investor events? The World Defense Show will take place in Saudi Arabia. Companies scheduled to participate include General Dynamics, BAE Systems, Lockheed Martin, Airbus, Boeing, Northrop Grumman, and L3 Harris. As part of its presence, Boeing will present a virtual reality display of the F-15EX cockpit. On February 6th, BigBear.ai will host an investor presentation that will include updates on the company's planned acquisition of Pangiam. Then F5 will host the strategy and product session for investors and financial analysts on February 8th. So not a whole lot going on. On February 8th, in connection with F5's premier application security and delivery conference called App World. Yeah, so not a whole bunch on the event front, investor event front, other than the World Defense Show. I'm sure that will be something that a lot of people are paying attention to, considering where we are in terms of global tension, with war bubbling over in a lot of different theaters globally. Sure, that's something that will have a few people watching, see if they can update themselves on the new ways to blow people up, right? On Monday, let's check out let's check out our we know that sometimes that newsletter can fall short, so we want to make sure that we are always checking this and double checking and triple checking things so this stuff isn't sneaking up on us. Monday, February 5th, we get S&P final U.S. service PMI. It's at 9:45 a.m., so that's full. Wednesday, same thing. Boston Fed President Susan Collins. We're not really getting super important information on Wednesday. Thursday, we get initial jobless claims. And then Friday, we get CPI seasonal factor revision. So that's not the same as CPI. So overall, it's looking like a light week on the economic and politics calendar front. I'm not seeing a whole lot here that would be moving and shaking markets. Definitely not like last week when we got multiple pieces of information. Plus, we got a Fed day and we got Powell speaking. Um, so yeah, not anticipating nearly as many things as last week, which was nice. Like last week was a very, very, very tough week in terms of like how much was on the slate, and that's why it was even more important to understand that and factor that in, because role and how we moved, right? How we moved all last week. The determining factor was all those things we had going on. Let me see here. Can I get the week ahead? I just need my straight up today. But that played a huge role in how we moved last week, right? And a lot of people got absolutely destroyed last week because the market was chopping. We FOMC news, so people thought, oh, we'll continue to drop. They got slaughtered because we popped right back up the next day. And then the only day where you got like really good movement on a lot of fronts was Friday, right? After we gotten all that information and all that stuff out of the way. So it's so important to be here and game plan, right? That battle plan is important because if you fail to plan, you plan to fail. And the market isn't something where you can just hop in and be like, hey, like, let me try this. Like, no, there are much more educated dollars at play that will be, completely obliged to add your money to their portfolio, right? So make sure that you are not out here just donating to the market, donating to market makers, or donating to us, right? Because we're going to make sure, for darn sure, we're on the best side that we can be of these market moves. That's following the big money and seeing what the charts are telling us is likely to happen and taking advantage of it. In terms of top news here for our Monday specific news, all about the data coming off a sizzling jobs report, which showed non-farm payrolls accelerating by 353,000 in January. Investors tuned into the latest commentary from Jay Powell, who appeared on 60 Minutes on Sunday. The Fed chair was quick to highlight the robust U.S. economy and path towards a soft landing, as well as inflation that has come down sharply over the past year. Central bank watchers had much to digest in his latest remarks, with much of it echoing comments he made at his press conference on Wednesday, when the Fed kept its policy rate at 5.25% and dented expectations that it would cut rates in March. It might have dented those expectations, but I still believe that's when it'll happen. We'll see. If it's not March, I think it'll be close to then. Is inflation dead? Quote, I wouldn't go so far as that. We're making good progress, but the job is not done. Restoring price stability means inflation is low and predictable, and people don't have to think about their lives. So why not cut the rates now? Quote, well, this is Powell speaking, by the way, on 60 Minutes. Well, we have a strong economy and feel like we can approach the question of when to begin to reduce interest rates carefully. Growth is going on at a solid pace. The labor market is strong, 3.7% unemployment, and inflation is coming down. What is it you're looking at? Quote, it's not that the data aren't good enough. We just want to see more good data along those lines. It doesn't need to be better than what we've seen or even as good. It just needs to be good. So I feel like that makes me think that they already know what they're going to do as well. It doesn't need to be better than what we've seen or even as good. It just needs to be good. So it's like, okay, as long as we continue to meet what that's telling me is that the expectations is like a minimum threshold as opposed to us like trying to actively reach goals. You know what I mean? That's like, again, to equate it back to a report card. I'm not looking for A's. I'm just making sure they're not B's, right? That's pretty much where we're at, which is encouraging for a rate hike sooner rather than later. Back to what he said. And so we do expect to see that. So he's saying that, looking for things to be good, not as good as what we've seen or better than what we've seen, just good. And he says we do expect to see that. And that's why almost every single person on the Federal Open Market Committee believes that it will be appropriate for us to reduce interest rates this year. Wink, wink, right? What's the danger of moving too soon? Quote, danger of moving too soon is that the job's not quite done and that the really good readings we've had for the last 6 months somehow turn out not to be a true indicator of where inflation's heading. So what is the danger of moving too late? Policy would be too tight, and that could easily weigh on economic activity and on the labor market. Are you committed to getting all the way to 2% before you cut rates? Quote, no. That's not what we say at all. No. I think he means no. We're committed to returning inflation to 2% over time. I said that we wouldn't wait to get to 2% to cut rates. More positive and bullish rate cut talk. Is the national debt a danger to the economy in your review? Quote, in the long run, the U.S. is on an unsustainable fiscal path. The U.S. federal government is on an unsustainable fiscal path. And that just means that the debt is growing faster than the economy. So it is unsustainable. I don't think that's at all controversial. And I don't think we know that we have to get, and I think we know we have to get back on a sustainable fiscal path. So those are like the main highlights of the 60 minutes session kind of distilled down here, which is so nice because you just got that whole 60 minutes in what? 3.5 minutes. Good deal. Other highlights: Powell doesn't expect the slump or that the slump in commercial real estate will lead to a banking crisis. Some smaller banks may collapse or may have to merge with other banks, but he doesn't foresee the CRE market triggering a 2008-like financial crisis. Powell also flagged geopolitical risks as the greatest threat to the world economy, as recently identified in a Wall Street breakfast poll, but said that engagement with the world and in American leadership could benefit security and economic arrangements. So yeah, nice little summary of the meeting, or excuse me, the session that I guess Powell had on 60 Minutes. That'll likely influence or have some influence on market sentiment today. I'd say overall it was pretty bullish stuff that he said, and I feel like that would serve to, I wouldn't say catapult the market, but it could be one of those things where the market is already on its way to catapulting, which, as I previously outlined here, it was right headed into Friday, and depending on how we close today, the setup is there. This could be one of those things that doesn't block that setup, right? And it allows those buyers to finally fully take control and push us higher after some choppiness last week on the major indices. That being SPY, QQQ, right? In terms of sports news, ready for the big game. The 2024 Super Bowl is setting up to be a jackpot for the Las Vegas Strip and sports betting operators. The perfect mix of sports betting legalization in new states and a high interest game featuring the Kansas City Chiefs and San Francisco 49ers has some forecasters predicting that legal wagers could top 1.35 billion, while headlines involving Taylor Swift, and Kansas City Chiefs star, I'm not even going to say his name, could also prove a significant factor. I'm over it. I'm super, super, super over it. I used to like the Chiefs. I used to like Mahomes. I'm just over it at this point. Meanwhile, hotel room rates have soared in Las Vegas since the Chiefs and 49ers nailed down their spots in the Super Bowl, and it looks like high-end consumers are not pulling back on spending. Yeah, I'll be throwing some bets on that game for sure. This past Sunday was the first Sunday in like so many months that had no football on. And it was the worst. It was the worst, and it was sad. But I'll be putting together some Super Bowl bets. So I don't know. Maybe I'll throw up a poll if you guys want some of those or want some of those. Maybe I'll, toss those up there. But I didn't. I wanted to give myself like a full season of like doing pretty well with it before I like exposed it to anyone else. But it's the last game. It's the Super Bowl. So what? Maybe I'll throw something in the group, see if anybody wants to hop in on the action. In terms of global news, stabilization fund, quote, while no specific, not quote, but while no specifics have yet been disclosed, Chinese regulators are pledging support for the laggard stock market. The development comes amid a steep sell-off in mainland Chinese stocks, with the benchmark CSI 300 index notching a 5-year low last week. The index was down 6.3% in January, a record 6th straight losing month, as macro concerns overshadowed any hopes of a significant rescue package from Beijing. Elsewhere, former President Donald Trump said in an interview over the weekend that he would consider tariffs on imported Chinese goods of more than 60%. I don't think that would serve to any further worsen our relationship with China. Again, me being facetious here, that would definitely cause further escalation with China if that were the case, and they would just do the same thing back to us. So it's like tariffs. It's a tough thing. We've talked about that here before. Tariffs like really just end up hurting the consumer more than anything. Like the Chinese companies don't pay anymore; they just make us pay more. In terms of trade news, shipping and handling, the U.S. has vowed to step up its retaliatory strikes against Houthi rebels and Iran's proxies in the Middle East if attacks on ships in the Red Sea continue. Though President Biden confirmed he is, quote, not looking for a wider war. Dozens of strikes were leveled against Houthi targets in Yemen this weekend, adding to the wave of unilateral American attacks on Iran-linked targets in Syria and Iraq in response to last month's drone attack that killed 3 U.S. soldiers. Tensions in the Red Sea region have prompted shipping companies to reroute their vessels around Africa, leading to delays impacting companies across sectors, including automakers, energy firms, and even retailers. Something that we've been covering here pretty extensively. In terms of today's markets, mixed bag all around the world. In Asia, Japan up 0.5%, Hong Kong down 0.2%, China down 1 full point, India down 0.5%. London up 0.5, Paris up 0.1, Frankfurt up 0.3, the Dow flat, S&P down 0.2, NASDAQ down 0.2, crude down 0.6, gold down 0.5, Bitcoin up 0.2%, $43,153 per BTC. We get PMI composite final, economic data at 9:45, and then ISM service index at 10. So those are two things where shortly after open, you could see the market be impacted by those two pieces of information, right? We get chop, and then we finally get some movement at 9:45, and then we get chop and get some more movement at 10. Maybe the market waits for both of those things to be out of the way before it follows through with the move that it was already going to do, right? In order to make that news look like a catalyst. But it's just important to have that on the radar, right? As you're out here, if you do make any moves here early morning, right at market open. In terms of what else is happening, we can finish up here with our rapid fire stock news rundown. U.S. House Speaker slams Senate's $118 billion bill on border in Ukraine. Goldman Sachs compares the Magnificent Seven and the tech bubble 5. Grocery prices in focus as FTC weighs Albertsons Kroger deal. Those are just two grocery stores. The stocks, bonds, script, global debt hits a new record. What New York Community Bank Corp's ticker NYCB route means for mid-cap banks. LNG export project freeze expected to drive up emissions and hurt security. More trouble for Boeing. Supplier finds new 737 MAX flaw. Boeing just sucking. This analyst thinks AI may be more than a buzzword for Shopify. Apple was the least shorted S&P 500 IT stock in mid-January. And then 2024 re-election bid. Biden wins South Carolina Democratic primary. So that'll wrap us up. Put a bow on it. People can take it out here. We are diving feet first into the second month of 2024. Let's make some money. Let's make sure that we're executing. Let's make sure that we not only are aware of the opportunities out there, we are leveraging that opportunity in order to line our pockets with more money, to give us more freedom to seek fulfillment and live a life that we can look back and say, I had fun doing that, right? Or I enjoyed doing that, or that was something that I'd do again, right? Instead of just running a hamster wheel and then croaking one day and being like, well, really wish I'd done some things differently. If you feel like that, have that drive you to do something differently today, straight up. That's how it is. Because at the end of the day, we live, we die. Those things are guaranteed. But that part in the middle is determined by what you decide to do each and every day. And most importantly, what you decide to do consistently. So make this session consistently part of your routine, right? You are really just here investing in yourself, and you'll see that manifest in terms of your account balance as well. So let's kick butt this week. Much love to everybody. I'll see you back here tomorrow morning for our next pre-market prep session. Let's have a great day.